In this lecture, we're going to talk about budgets. We'll talk about the need for a budget, how to calculate the right budget, and how to actually build all of these budgets, especially related to our production budgets. There are three distinct functions that go into building a budget. The first one is planning. Planning involves setting goals that guide our decisions and help motivate those employees. Under directing, the second piece, we look at how these decisions are affecting our actions to achieve the goals that we want to accomplish. The third piece of budgeting is controlling. Under controlling, we look at comparing our actual performance against what we had budgeted would happen. And we look at those differences there and see where we need to improve on or where we are doing well. Some areas of budgeting that we need to be concerned with are how we set our budgets. Are we setting them too hard? This tends to demotivate employees because these goals are unobtainable. Or are they too easy? Do they allow too much budgetary slack? For example, if we know that our compensation might be tied to whether we hit our budget or not, we might build our budgets a little bit too easy to make sure that we are hitting the goals that we need to. Therefore, we need to look at building those budgets just right. In order to build them right, we need to make sure that they have a proper approval system to make sure that other people are looking at these budgets and not just the people they affect. These are all of the budgets we're going to be looking at and then some. But I wanted to give you this chart to show you the process of the budgeting. First, we have to start with our sales budget. The sales budget is going to tell us how many units we expect to sell. We have to know that in order to build the production budget and all of those product cost budgets. This will all lead into our cost of goods sold budget and our budgeted income statement. So therefore, we have to start with our sales budget in order to get all of those budgets done. The sales budget estimates the quantity of sales we are going to have. This will also tell us what kind of cash receipts we will expect to have during each particular month or period. To get to our sales budget, you would just take your expected sales volume times your sales price, and it's going to tell us how much we expect to receive in revenue for that period or time frame. Now, typically, we have more than one product we're looking at, so you'll have to take each product and each division into consideration. But you're really just taking your expected sales volume times your expected sales price to get that total revenue. This information is just coming from experience or what they expect or what that has usually happened in the past. After we complete the sales budget, we can then move on to our production budget. The production budget estimates the number of units that we need to produce in order to meet our budgeted sales. So what we're going to do is take the units that we expect to sell, which is going to come from our sales budget. We're going to add a desired ending inventory. Remember, these are just budgets and guesses at what's going to happen. So we want to make sure we make enough units so that if we are a little off on our guesses, we still have enough items to sell. We subtract our beginning inventory because those are the units we already have available to get how many units we need to produce. Looking back at our example of wallets and handbags, again, typically a company has more than one product they're looking to produce. So we're going to take the sales budget from each of those and calculate how many units we need to produce based on our sales using that formula. You, again, take your expected units to be sold plus that desired ending inventory, which they'll give to you. Subtract our beginning inventory, and remember, one month's ending inventory is the next month's beginning inventory. So typically they won't give you a beginning inventory because you'll have that last month's desired ending inventory. But this will tell you how many units you need to produce. Now that we've completed the production budget and know how many units we have to produce, we can see how much material we need to buy in order to produce those units. The direct materials budget estimates the quantity of direct materials that need to be purchased in order to meet those demands. The direct materials budget is performed in 3 different steps. In the first step, we have to look at how much material it's going to actually take to produce each unit. Because remember, we're building this direct materials budget based on how much material we need, not how many units we need to produce. Therefore, to get the budgeted direct material required for production, we take our budgeted volume that we got from our production budget and multiply that by the direct material quantity expected per unit, or how much material each unit takes to make. In the second step of the budget, we again look at that equation, taking the materials required that we just figured out. We'll add that desired ending inventory because remember, we want to keep a little bit of a cushion there in case some of the materials are flawed or break. We want to make sure we have enough materials on hand. Then we would subtract our beginning inventory to get the direct materials we need to purchase. Now that we know how much we have to purchase, let's look at how much it's going to cost us. In step 3 of this budget, we take our direct materials to be purchased and times it by our unit price. This will show us how much cost we expect to have for these direct materials. Let's go through an example of our direct materials budget. They'll give you a lot of information, and remember, typically you're looking at more than one product. What we're going to do first is determine the budgeted direct materials that are required for production. In order to do that, we have to look at how many we're going to produce from our production budget, and then how much material each product is going to take. The next step is to look at our budgeted material required for production and adjust it for that desired ending inventory and subtracting our beginning inventory, what we already have. Then, finally, in step 3, we take that quantity that we need to purchase and multiply it by our price. So in this example, we're looking at how many yards of material we need to purchase for leather and lining, and we have a price for each. Once we do all that math, we can figure out how much we're going to actually have to spend for this direct materials budget. After our direct materials budget is done, we need to look at our other product costs. Our direct labor cost budget estimates the direct labor hours needed and the related costs to support that budgeted production. The direct labor cost budget is determined in 2 different steps. First, we have to calculate how many hours are expected to be required to complete our required production per our production budget. To do this, we take our budgeted production volume, again this is coming from our production budget, and multiply that by how many direct labor hours is expected to complete each of those units. Now we know how many hours that we need to assign to complete these units. Then we need to multiply that by our hourly rate to figure out how much direct labor costs we need to allocate in order to produce these units. This is an example of our direct labor cost budget. Again, we're looking at 2 different products, and in this case, each product goes through 2 different departments. Each department requires some time that the product spends in it before it can move on and be completed. So we're going to first take a look at how many hours are actually needed to complete each product. So, for example, the wallets. we're going to take a look at the wallets, which we needed 520,000 units. This is coming from our production budget. Then we look and see how much time this wallet needs in the cutting department, which is 0.10 hours per unit. So we assign 52,000 hours in that cutting department for each wallet. In the sewing department, they each take 0.25 hours for each wallet. Then we take that 520,000 units we're going to make of that wallet, multiply it by the 0.25, and we know that 130,000 hours are going to be spent in that sewing department for each wallet. We look at our total hours that are needed in each department and multiply it by an hourly rate that is assigned to each department. This will give us our total direct labor cost. And finally, we look at the last of our product cost, the factory overhead budget. The factory overhead budget estimates the total cost of your factory overhead. The easiest part about this is all of this information is just given to you. You just have to know that the factory overhead cost in total is budgeted, and this is part of our cash payments that we'll be looking at in the future. Now that we know how to complete all of our production budgets, we can move on to look at how to complete all of the other budgets that are necessary.